to make a decision, he has to address the board.
That's fine.
And the board has to agree that it's in the best interest of the company.
Come on.
They're not in our industry. They are in tangent industries to us.
Wow.
So they actually get to say, hey, have you thought about it this way? Hey, how will it impact that thing? That's what they're doing. And Marathon meets with them every quarter to ensure that we're on the right track and in the right spaces.
That's good.
So, hold on. I was honest, I'll be really good at my brain.
Mutual.
I know. That right there.
The person
Oh,
who's sitting
there we go,
in
there
the
we go,
board.
there we go. Okay, so another one of your carrier friends that is not me, recently was in the news. You guys can look it up. It's fact. For firing 10% of their internal sales force or their internal office. 10%, which is a lot of people. So they fired 10% of their workers. Here's why they did that. In the first 2 quarters of this year, their stock crashed.
Wow.
Because they're a stock company. Crashed. So, I can't say. So, what happens is, in order to regain profitability, they fire employees. Right. Now, if that profitability doesn't go up, they can't afford to fire more people, they're too lean, they can't process business. Guess who gets impacted next?
The policy holders.
Policy.
No.
Not you guys. They need you. They can afford to mess with the other people because you won't know. Because it's in the product, it's in the fees.
Tell us what it is.
You can look it up. You can look it up. It's all over LinkedIn, my friend.
No.
So, and by the way, they have tried, a lot of those people have tried to come get jobs with us.
Wow.
That said,
We're recruiting.
guys, but let's take this serious for a hot second. Here's why. Because you're actively selling these policies right now
Yeah.
to
Yeah.
this company who's just done that thing.
Wow.
That in the next 2, 3, 4, 5 years could increase the cost of insurance and expenses on all the policies you sold. And you didn't have a say. Your client didn't have a say. That's just what they get to do contractually, it's their right.
Wow.
So when you choose your partner, your product, you have to think about more than just what the illustration is showing, and more than just what the commission statement is showing, but your reputation and your integrity and your morals.
That's fire.
Right, because and that's what's happening throughout the course of your job.
Yeah.
Another example of this is a different carrier who I've not seen under anywhere.
Hey,
They were purchased by Krispy Kreme. So Krispy Kreme can say they own life insurance company. And this happens every time I do this. Because we're the Google tag. So guys, hear me though. Hear me really quickly. They were purchased by Krispy Kreme. Again, the agents who work with this company didn't get a say. And they woke up on a Monday, and their policies are now being run by a guy who's only ever done donuts.
That's crazy.
Right? So, who you do business with matters. Now that you guys are all fired up. Spicy gritty. I told you I'm a little child. Come on, people have problems. I want to get into living benefits with you guys. Does that sound fun?
Yeah.
All right, because it continues our conversation of how good we are. And that to me is just all it needs. That's all it needs to be. Okay, so let's actually start this conversation with why living benefits are still really important to talk about. Because if you feel like you've talked about them too much because you've been doing this for 5 years, 5 days,
Talk about it here. You're hacking the system.
So, you can never over-talk living benefits.
Yeah.
Let me just tell you, you can't. It's physically impossible. I've been doing it for 13 years, I haven't stopped.
Hey.
Not enough people understand it, and there's too many versions of it out there. Okay? So you have to talk about it until these people sit, because then they'll finally understand. They get paranoid. They do. They have to. So let's talk about COVID for a second. Although COVID feels like it was 10 years ago, it really is still very prevalent in our minds. We are still very afraid of getting sick.
Yeah.
Because it impacted our psyche in such a way that we don't know now if we go outside and touch a bird, if that's going to turn into something where we don't show up tomorrow at our house. That's just where we're at. It's where all of America is right now.
Yeah.
During COVID, preventative care cancer screenings went down by up to 98%. People stopped going to the doctor for mammograms, pap smears, colonoscopies, the gamut. Okay? So preventative care screenings have not yet gotten to the place where they need to be. So that means we are catching people instead of at stage 1 or 2, we're looking at 3 or 4. Guys, we're not a bunch of doctors in this room, I don't think, but do you think it's easier to recover from stage 1 or stage 4? Stage 1, right? So it's really, really imperative that we get our country back to preventative care screening. Which is why when you feel like the underwriters are being harsh on your client, it's because there's information we need to understand their mortality. These screenings are important to us and to our mortality pricing. So, knowing that this is still a hot topic. Oh, and by the way, have you guys seen in the news that Alzheimer's is on the rise?
Yes.
Dementia, cognitive impairment.
Yes.
That's another thing that's drastically impacting us post-COVID. Okay, so understanding what COVID did to the fear and the medical side of our industry will help you excel relative to your competitors down the street. Because all they're talking about is caps and cars and the market and Trump and tariffs and yada, yada, yada. If you can talk to them about something that actually means something, you're gonna be a different agent to them. You're gonna be a life coach, right? So go in there with something different and something unique. National Life Group has been doing living benefits really in our entirety, but we've been promoting them since 1937. And I'm gonna read this to you guys, because I really need you to understand how good we are. Oh, I was so good, I opened the door with my mouth.
Yeah!
All right, so this ad is from 1937. It says, in plain language, your life insurance may serve you as your savings fund, trust fund, loan headquarters, emergency reserve, and looking ahead, it will serve you as a source of guaranteed income. 1937. For your retirement years. Here are but a few of the living benefits which a company like National Life of Vermont offers through life insurance. Guys, I don't have a Snoopy dog. Tom Brady doesn't sing my jingle. There's no golfers with my logo on their chest. But I have something that my other carrier partners have never even, they weren't even born when this app was created. So when we talk about living benefits, when we talk about what's happening in America today, when we bring all of that together, it's to help empower you to go make a difference.
Come on.
So let's get into exactly what those benefits are. And you may notice, why is this like this? You may notice that I'm going to talk some smack. I love it. Here we go. Cool. So this is our living benefits lineup. This can actually be found on our wall. How many people have seen this?
Yes, I see it.
That's fire.
It's on the website.
It's on the website.
I'll tag them on
Here's the thing, guys. So I'm gonna level with you all. This is for agent use only,
Yes.
meaning it's really for your educational purposes.
Oh, we can post it?
No, cannot post it.
Okay.
There's not enough information on here for a client to make an accurate decision on their product, right? Because it doesn't talk about product, it just talks about the brand. However, living benefits are like snowflakes. As a Vermonter, I can use that analogy. No two snowflakes are ever the same.
Hey.
No two accelerated benefit programs are the same. They are regulated by carrier, by state, by product. Each state actually controls these riders. So, and that's why, and I'll tell you why California is hard in just a minute, which we all know, but I'll get into it.
Yeah.
So, the reason I'm telling you that is because as you're educating each other, and if you're educating some friends and family, I don't mind if you do something like this, just don't leave it with them. And don't allow them to take pictures of it. Just use it for your own usage, and it helps people. I'm a visual learner, personally. I need to see something like this to understand the impact.
Yeah.
And here's why. It is so easy for clients to try to tell us what they know and why what they know is better than what we know.
Come on.
So easy. So what they do is they go, oh, Brittany, I don't need that. I have living benefits already. Because their agent from 20 years ago told them they had a terminal illness rider. So sometimes it takes pulling this bad boy out and saying, but you don't have the new kind, right? Or you don't have the upgraded kind. This kind of helps put things in perspective.
Yeah.
So if you have to use it, just walk with caution. Okay, so here we go. National Life Group. Terminal illness with National Life is an illness that results in death within 24 months or less. Why is this important? Look at all those competitors that say 12 months or less. So if I have an illness and I go to the doctor, and the doctor says, Brittany, you have something only Meredith Grey in Grey's Anatomy has ever discovered. And you have 18 months left to live. Okay? If my policy is with, I'll use PAC because they're local. If I have a policy with Pacific Life, can I get money from them?
No.
No. PAC would say, tell your Benny to come back and do that. Because that's all they can say. They can't help me, right? They can't help me. And by the way, even if they could help me, they're gonna give me 75% of my death benefit up to $250. So if I have $1 million policy, I can't even scratch the surface, right? This little area, my friends, is called the bold print giveth and the fine print taketh away.
Wow, that's fire.
I have a lot of singers, yeah. So,
Preach.
I'm saying that
Bars,
because,
bars.
again, it goes back to no benefit is created the same.
Hey,
So just because you think you have something,
bars.
let an advisor, let someone who specializes talk to you.
Let's go, Denzel.
So, that's terminal. Chronic illness is an inability to perform 2 out of the 6 activities of daily living, or, did you know the or? Okay, inability to perform 2 out of the 6 activities of daily living, or.
Lesiones graves.
You guys been selling these products? You guys know
Wow, Kevin.
¿Sí, no? ¿Lesiones graves?
Guys, when we become really close friends, I'm actually gonna quiz you on this one.
Whoa.
I will, because if you can't tell it to me, you're not telling it to your client. Or cognitive impairment. Cognitive impairment.
¿Qué es eso?
Let's talk about why.
Oh. Ya no, ya tú sabes. Ya ahora sí tú sabes. Tú sabes.
Let's talk about why I care about the or so much. Let's really break it down.
Por eso no vendemos.
We are experiencing something called a sandwich generation.
Por eso no vendemos.
Okay, and guys, this actually gets pretty serious. So, the reason it gets serious is because infertility is up by about 300% in our country. Women are either not able to have children,
No way.
and or having children later in life,
Wow.
making decisions to delay childbirth.
300.
And while that, and it's not just women, it's also men, there's a lot of sperm issues out there. So, by the way, that could be marijuana, we don't know.
Come on,
I
Denzel.
hate when I say that. So, the reality is though, we're having children later, okay? So, I'm 36, I could have my first child when I'm 40. Well, my mom is gonna be in her 60s, and she has early onset dementia, then she is ailing, right? She's not able to turn the stove on or remember her name, and I'm taking care of a newborn. This is what's happening in this country. It's on the cut. It's all gonna break in, right? And here's the thing, it worsens from there, if you can believe it, because I'm the favorite child and I live in the warmest state, my mom is gonna come live with me, right? So I have a baby and I have my mom who lives in my house. And my husband is like, I didn't plan for this. What is the leading cause of divorce?
Financial.
Money. So my mom getting sick, me struggling with fertility, could equate to a divorce.
Wow.
That's not what we planned on. No premarital counseling gets ready for that.
Wow.
All I needed in my family unit, all my mom needed, was a policy that covered her for cognitive impairment.
Wow.
Do you see why or matters?
Yes.
In this country specifically, we are having massive fertility issues.
No
So
way.
understanding the problems in the sandwich generation, which affect men and women. This is not a female conversation, it is a holistic conversation. Because again, yes, it's my mom, yes, I'm the one having the child, but it's him as my provider, as my husband, who is also deeply impacted. So,
Wow.
when we look at the accelerated benefits, having the or is everything.
Amen.
Okay, so, chronic illness is an inability to perform 2 out of the 6 activities of daily living or say it loud. Thank you. So, at National Life Group, we do not require a permanent chronic disability. Again, bold print, guys. The reason this is important is because if you had something called a Bell's palsy, which is a stroke, where you can lose 10% of your function or 100% of your function, but you can get better. You need certain treatments and doctors and medications, you can get better, okay? If you had Pac Life's policy where it says permanent, because you have a chance of recovery, they can say, you're good. No, thank you. Okay? Permanent matters. During COVID, we had clients who had COVID so severe They could not perform 2 out of the 6 ADLs for
Wow.
90 consecutive days, right? That happened all over the country. We were able to offer them money, where these carriers wouldn't, because it wasn't permanent,
Take them down.
right? So, keep in mind, again, all these little pieces of information. So critical illness, there's 13 triggers, but I'm gonna talk about the major 3: heart attack, stroke, cancer. Blindness, ALS, all that stuff is in there, but most people don't resonate with it. Heart attack, stroke, and cancer. Those are the 3 biggest illnesses of our country, and certainly cancer is one of the longest running illnesses we've ever seen, right? When we get to heart attack, stroke, and cancer, 6 major insurance carriers aren't even in the conversation anymore. They've left the chat, as the cool kids say. So, guys, New York Life, who I used to work for 1 year.
Sounds like.
Yeah, New York Life is here. They're the only company on this slide older than my company, so we've been in the game the same amount of time.
Come on.
And they haven't figured out how to price in cancer coverage.
Wow. New York, who?
So, the reason I bring this up is because when you are sitting with someone, especially if you're new to the industry or you're new to sales and you don't have your confidence yet, I'm trying to instill confidence.
Yes, thank you.
Because when that
That's
client
hard.
says, no, thank you, I have it, I want you to have confidence from this conversation that they probably don't.
Wow.
I want you to walk out of here and go, you know what, they're probably lying to me. And they don't know they're lying, right? It's an unconscious lie. This is what they believe that they were told 20 years ago. So have the confidence.
Fired.
Okay, I ordered it.
Fired.
Okay, I ordered it. I feel like I said cooler things. So anyway, the reason I bring it up is because I hear all the time, people say, well, I tried to tell them. You're not confident in what you're selling.
Yes.
Because they can't be able to talk to you.
Come on.
Think about it this way. If I, because I'm not putting any onus on anybody today, if I walked into a cardiologist and I have a heart problem, I'm not gonna look at the cardiologist and say, I've done all the research. I want this medication, this treatment plan, this time. No.
Yes,
They're
yes.
gonna look at me and say, here's what I recommend, here are your options.
True.
Feels comfortable. We always let the client flip the table on us.
That's right.
Because the TikTok told them, and Robinhood told them, and YouTube, and then they watched Patrick's podcast, and he told them. It's about here, and it's about you being the expert.
That's right.
So this, what I'm trying to show you, isn't because I want you to have it memorized by the next time I see you. It's because I want you to walk out of here and go, I'm selling something they don't understand, and I have to show them why it's important.
Yes, yes.
So then, critical illness, critical injury. This one's fun. Critical injury. Coma, paralysis, severe burn, traumatic brain injury. Okay. Think for a moment, we're gonna have a little back and forth here. Think of jobs, occupations that have or could have coma, paralysis, severe burn, traumatic brain injury.
Wow.
Go.
Construction,
Firefighters.
welding,
Electrician.
Electricians, roofers,
No, not architects. Oil
no, they're on the, contractors, construction, no, that's fair.
It's any single job with a slip and fall.
The
Really?
reason I say that is because we're underwriting for hobby, not occupation. So that opens up your game a little bit.
Bodybuilders too.
Any person whose job could impact them is still available to get these riders.
yes.
Coma, paralysis, severe burn.
Oh, that's good.
Here's the thing though, friends, because I'm always being recorded and listened to.
Hey.
You cannot walk into a firehouse or a precinct or a military troop and say, hey, all of you will get this. Okay, National Life can't have that much dense risk in one spot. No carrier can. But what we can say is I represent a company that has this rider, and if you qualify, it'll be on your policy. So the education, the awareness. There are plenty of people who sell this to the military. And to other jobs. It's the hobbies that are our concern. So if you like to go motorcycle riding once a year in the French Alps, we're probably not going to cover you for that, right? This is something totally different than that. Also call athletes, okay? So think about college for a second. There's 2 reasons college athletes don't go pro. Talent and injury, okay? And if you're injured, unless you're going to Duke or some D1 school, they're not going to pay for your injury. What if instead your 18-year-old had an IUL policy with accelerated benefits on it, and if they got injured on the court, you could use that to pay for it? Okay? So college college is a big one too, or athletes. Last but not least on here, we have Alzheimer's disease, and then I'll get to Alzheimer's disease and Lewy body dementia. So I just talked to you guys about cognitive impairment. How is this different? With this, because Alzheimer's and Lewy body is non-recoverable, we're just gonna give you all the money at one time. So it just gives a lump sum distribution of the money. With the the chronic illness up here, you just have to requalify every year to prove that you're still sick, because we don't require permanence. You just have to prove you're still sick or sick or cognitive impairment to get that every year. With Alzheimer's, we're just giving you a lump sum because it's not recoverable. So these are all in the product. Term, whole life, IUL, fixed UL, doesn't matter. It's all in the product. Built in, priced in. They're tax-free when they get paid out. You guys might be thinking, how is that possible? They're covered by tax code 101G. It's an actual tax code. We will send them a form, I forget the form number, in the mail, and that's only so they can prove to the IRS they didn't steal or embezzle money. It's literally a form that just says it was provided to them by an insurance company. Because when somebody gets an extra $400,000 in their bank account overnight, the IRS notices that. So they are tax-free. They're paid out upon the sickness or injury. And the last thing you have to remember is you have 365 days from the date of diagnosis to make your claim. Okay? Not the date they got their treatment, not the date they discovered the limb or whatever. From the date of diagnosis.
How many days?
365, 1 full year. Now here's the thing. They could come to us immediately and tell us about it, but they don't have to take money right away. They can say, like for cancer, for example, it could be stage 1. They might want to wait in case it progresses to stage 4. And then they would take their claim, right? So you don't have to take it immediately, but you have to make us aware of it within that year. Does that make sense?
Yeah.
A little bit? As much as I can.
Yeah.
You had a question?
Yes, so like, because I know a lot of construction workers, what qualifies them for that critical injury?
Just being human.
Just, okay.
Yeah, yeah.
So
It's
it's not
just,
about like their health or?
well, they have to, as long as they can
Qualify with.
qualify for the insurance,
Yes,
then yeah, they'd be good to go.
okay,
Yeah.
is there any special thing that I would have to add to the policy, or it just
Nope,
comes right?
it just goes right in. What we'll do is we'll notice if, for example, if the.
Salen un montón y nomás que se les vayan vivos,
How many people we got,
Salen bien
and if we
muchos y
feel
nomás
the
que se les
risk
vayan
is too
vivos.
high, we'll limit it, but other than that, no.
Okay, so I can even offer it to like companies?
Yeah. Because they're just buying a life insurance policy, and that's just a rider on the policy.
And how would you, kind of present that to the owner? Like, I mean, obviously it's a benefit to the employee, but,
Yeah.
how can it benefit the employee?
That's a great question. So in the employer's mind, it could be what we call golden handcuffs. So because they're offering a benefit that's unique to any other construction company out there, it would keep the employee longer at the helm of the company. Employers, if they have the right sort of accounting unit or accounting departments, can also pay the insurance premium or pay for half the insurance premium if they want. So they can participate in helping pay for it if they want to. It's still owned by the individual, but again, it creates an added benefit. So when you think of an employer's benefits package, we often just think medical, dental, 401k, right? This would add a fourth that would be unique to that company that they wouldn't get at another construction company. So from an employer perspective, maybe there's no tax breaks or anything like that, but it's a retention product. It keeps those people with them, it keeps them. And if you're a small firm, you might want to just keep the family spirit there and offer that sort of policy, right? So that would be how you would offer it, maybe in that group zone.
Okay.
And we can list bill it. So the way that we would do that is, let's say the company had 20 employees, we would send one big bill to the business that would either be paid for by the business or by the employee, however we do it. So we can help with that. We have an advanced markets team that would navigate that with you.
And it's not, you said that, they can't write it off as a tax?
No, it wouldn't be a tax break in this particular circumstance. Those are different types of structures.
That would be, key person insurance?
Right, like a key person policy. Yeah.
Okay, thank you.
Yeah. Okay, so I could go on for like literally hours and 8:30 at night. What questions, what thoughts, what?
So I saw that the last two critical injury and below, the rest of the competitors, they did not, they do not offer it, or?
They don't have it.
They don't have it. So critical injury and Alzheimer's, yeah, because I know that Alzheimer's, and it just got introduced last year, correct?
In California last year, but it's been out for about 2 years across the country. Yeah. So in California, I'm glad you brought that up, because I wanted to explain it to you guys too. In California, we're experiencing something called a specified disease statute. Yeah, I'm very fancy. So the reason this exists is because in California, you get life and health license at the same time, right? And so what a lot of agents were doing, and they were very proud of this, is they would walk up to a client and they'd say, okay, you can get this medical insurance policy for this premium, this deduction, yada, yada, yada. Or you can get this life insurance policy that covers you for
Come on, Nick.
So yeah, so you can get this medical insurance policy, yada, yada, or you can get this life insurance policy that will leave money to your heirs, cover you for cancer, and it's like a souped up IRA. That's how they were selling it. And so which one were customers buying? The life insurance. Which one paid more commission? The life insurance. So California stepped in and said for any insurance carriers that want to sell something with medical benefits that is not medical insurance, they have to be more scrutinized. So basically here, you have to use very specific language in these to not mislead the client about it being medical insurance. This is the only state that we have to ask on the app if your client has medical insurance. Bless you. And that's why. Because we need to be able to prove to California that we're not being shamed. So it takes longer, the whole point of saying is, it takes longer to get things approved because the verbiage has to be really specific for the state to approve it.
No, if they don't have medical insurance, is that an automatic denial?
Not necessarily, like they'd see a terminal, chronic, and critical, but they won't get maybe like critical illness, but I don't think they get injury or Alzheimer's or something like that. Because you have to file it with the states, and because by the time the statute came out, these already existed in California. So it's just kind of relevant to that more so than anything. That's why a lot of carriers don't have chronic though. They had, the state took it away because of how they were marketing it.
Would that only be for California? Like that they have to have medical insurance in order to qualify for everything?
Yeah,
Outside of California, they don't have to have medical insurance?
yeah, the other states mandated it.
So like I had a client who recently, I just got approved and she doesn't have medical insurance. So in the case that she gets medical insurance, can I contact
We can add it back in.
her? And she'll have all of them.
Oh, okay.
Does she have to go through like medical inspection?
Yeah.
No, for us, it's literally us checking the box for the state. Because we've already done the medical underwriting. We already see their health, because what we're underwriting for is mortality. So here's the thing, and this is the interesting thing about an underwriting mind. Underwriters are not doctors. Doctors are just trying to keep you healthy tomorrow. That's their whole game. Like, it's just getting you healthier tomorrow. Like, it's not making sure you live to 90, it's making sure you live to next week. What underwriters are looking for is not how healthy you're going to be in a week. How healthy are you going to be for how long? So they're assessing your longevity. So for us, we've already done the medical underwriting. We already know how long, in essence, that person should live to if all things go well. But for the medical insurance card, it's because the state needs to make sure that we're not overselling living benefits as medical insurance. It's a state auditing thing. Yeah, so that's why it takes longer for us to do anything.
Could you go over again the cognitive impairment versus Alzheimer's?
Yeah. The simplest way to look at it is anytime someone is gonna get a chronic illness benefit, what happens is, like when I go today, which is, what's today, the 28th, July 8th. So I go today, my doctor says I can't perform 2 out of the 6 ADLs, take it to National Life. They're gonna give me 12 months of payment up front. So they're gonna give me 24% of my death benefit up front. Once they pay that to me, I go back July 8th of next year, and I prove that, my doctor helps me prove that I still can't do it. So then I get another 24%. And then I keep going until I exhaust it. If I get better though, let's say I only took it for 1 year, but I got better in year 2, then I just have 75% of my death benefit existing as a death benefit, because I only took it for 1 year. What Alzheimer's is saying is that's not recoverable. Why are we gonna make someone prove over and over again they can't remember things?
Oh, yeah.
So here's a lump sum of all that money. So,
And now, if you get a portion of it and then you do recover, that's still non-taxable. There's no,
Correct.
retroactive.
Nope.
Okay.
Yep. Here's the thing, the reason accelerated benefits were created is we want people to get back to their longevity. So if you, if you have heart attack, stroke, cancer, whatever, no, you're good, you're good. If you have an illness or injury, so think about me, again, I'm 36. So I'm elite rate class. With an elite, I'm expected to live to my age of 90. That's the hypothesis with an elite rate class based on my age. Let's say I have a heart attack, okay? Instead of living to the age of 90, that heart attack has now moved me to 75, right? Just the severity of it alone has basically shown mathematically I won't survive to 90. The idea behind the accelerated benefits is that National Life is going to basically infuse money into my house that I can use for experimental treatments, medications, modifications, or just to pay off my house and have less stress. That then would tell you that I could gain 10 years back. So now instead of, maybe I'm not living to 90, but I'm not gonna die at 70, 85 now, right? Like I'm buying back mortality basically, because I'm using better practices in my home or able to pay for treatments I otherwise couldn't have. A lot of our, our clients that have used this have actually done experimental treatments in other countries that their insurance wouldn't have paid for. So you can use this for anything. But yeah, so we're hoping this money gets you healthy again. That's the idea of it.
Is there any way that you can use your living benefits for someone else?
No. No, because it's all based on your mortality. Yeah. I mean, the only way would be that you got sick personally and you gave it to somebody, right? But like somebody else getting sick, we can't use that.
Or you can.
And I get sick from my neck.
Yeah, we can't, because all of the charges for it are based on you as a person.
What happened now, the person like, in your, we said it's 365, notice what if it happens like to pass the time? If they didn't notice.
Yeah, if they
If
didn't
they
take
have like a really like chronic, or critical illness and they're reporting like within those 365 days, like what happened? Do you have any
we
like?
just won't pay a claim. We won't pay on it. We have to just know that it exists. They don't have to, again, they don't have to pull money from us, they just have to tell us that they have this problem, this illness or injury within that time frame. And I think some of it comes down to like the time value of money, right? The inflation and things like that that can happen. Certainly our books have to be buttoned up by December 31st. There's a lot that goes into it. Fraud is really big. We've definitely had people defraud us out of these benefits because they pretend to be sick and they get a doctor friend to write a note, right? So we've been definitely defrauded. So there's just, timeline elements from that perspective. They just have to tell us. Like I know of a client right now who told us about 6 months in from her diagnosis, she still hasn't taken the money yet, and it's been about another year.
Yeah.
But we know about it, so we can make that payment when she's ready. We just have to know it exists. That's it.
It's another incentive to, stay in touch with your clients.
100%. 100%. Because they will undoubtedly forget about this. Because many of them are purchasing this, as much as they love this in the sales process in the moment, all they're thinking about after the lease is compound interest, right? Tax-free retirement. And when they're using their mobile app on their cell phones, all they're looking at is their interest crediting strategies, right? So we have to keep it tangible in some way, but they're never gonna remember this without you. Your question or your?
Yeah, so it doesn't matter what policy you get, it's embedded within all of it, that you get these kind of benefits.
Absolutely. So the only way they will come off the policy, which is a great question, the only way they will come off is, there's actually two. One is an underwriter takes them off for risk purposes. What I mean by that is, let's say I have a family history of Alzheimer's, okay, by the time I'm 50. Well, if I'm only 36 today, and my family's been getting it by the time they're 50, I would be too risky, I would need it too quickly. Whereas Alzheimer's traditionally is needed when you're in your 80s. So that I would be deemed too risky because it would be coming sooner than it's supposed to, just based on family history. Or sometimes medication, sometimes weight, sometimes other things, right? That's the time they'll take it off, if you're deemed too risky. However, you can change, if it's not family-based, if it's you-based, if you change your health, you can actually get these added back on. So if you get one removed because your medication made it risky, get off that medication, your heart rate's good and all that jazz, you can actually have it put back on. So there's that. The other one is substandard rate classes, automatically they fall off. Okay, so and all at different ones. I couldn't even tell, terminal's always gonna be there, but like, I think it's like table 4, this one comes off, and table 3, it's like, something like that. But they will naturally fall off in the software. So when you run an illustration, if you put a table rating in there, it removes the writer for you. It knows. It knows it's gonna fall. So those are the only 2 ways. Substandard and underwriter removes it intentionally.
I wanted to know, you mentioned earlier that, there was X amount of dollars that go unclaimed because of the beneficiaries. How exactly, because, and correct me if I'm wrong, obviously, but does the insurance company ever reach out
Yes.
to a beneficiary?
Yeah, but if we can't find them,
Oh.
yeah, if we can't find them. I mean, you gotta think too, number change, email,
People pass
maybe
away.
they're in like witness protection now, I mean, you never know. Well, you can't, yeah, they moved to a different country, and you can't keep track of them. And you have to think too, like back in the day, we get more data now than we've ever gotten on banking before. We didn't used to get this much. We're so old, we have a whole bunch of clients, we don't even have the clients' phone numbers.
Wow.
Because we didn't require it then, right? Like, that's how old we are. So we lose track of them, we can't find them. If we also can't find the deceased in the obituary because the family took it private, then we don't know that person's even died, right? Because they could just stop paying premium, it can happen. So it's often, like, I don't know if you guys do this in California as much, but in like Vermont, we have state fairs. So you go and there's like a big tent called unclaimed property, and there's binders with people's names in them. A lot of that's insurance money that people haven't claimed on.
Wow.
And it's like Marco, I think, or Zan looked it up last week, it's like $1 billion. Yeah. And here's the thing, like, we can't do anything to that money.
Yeah.
It's not like Meron doesn't have a jet because of it. It is literally sitting in a portfolio account, waiting.
Here, do you have a database where you can go in and check?
We always do.
No, yeah, here in California.
Oh, yeah, you guys do. You might have some money out there. You might have a 16-cent check, you don't even know. Okay,
I know this, but I want to hear from you. But when you have a child as a beneficiary,
Yes,
what happens when the insurer dies?
we cannot pay anybody under the age of 18 any money. So we have to hold on to it until they're 18.
So now, I don't know if this makes sense, but if for the example of IUL, for example, right? Does that continue to accumulate until the beneficiary can claim it? Or it stops when they die?
Oh, it will accumulate, but if the insured has passed away and they left it to their child, like let's say it's me, right? My policy I've paid for 20 years, I passed away, nobody knew I had it, right? Well, now there's no more premium going into it. So National Life has to use the cash value to pay for the policy that's in existence. It will probably implode depending on my age when I pass. But yeah, it would continue to create compound interest until it's claimed on.
So if you guys can't pay out anyone under the age of 18, and they don't have, they're not listed as a contingent, but as the